Well, hello, and welcome back to another in the series of videos where we focus on the VWAP Pro indicator from quantum trading. And in this video, we're going to focus on the fourth variant, if you like, which is an unusual one because it's called the TWAP, the time-weighted average price. And the difference, of course, one of the differences, of course, is that volume doesn't figure in the calculation. It is very much based purely on time and the weighting of time and averaging the price action over a period. Now, if you've watched the introductory video on all the indicators, then you'll understand the importance of the TWAP and how we use it. And what we've got here on NinjaTrader is very much a setup that we use a great deal. And you are, in fact, looking at two versions of the VWAP indicator, and I'll explain why as we go through the video. So we're on Meta, and we've got the same time frame on both screens. So we're on 1 minute. We're live. The market's been running for about an hour and a half now, I guess. On the left-hand side, we have the VWAP, and if we click on indicators, go down to our VWAP Pro, there we are. We are on the VWAP here. So on the left-hand side, we have the VWAP. On the right-hand side, however, we click on that. We only have the VWAP Pro as the only indicator, and we are on the TWAP, which is the fourth of our other indicators. So on the left, we have the VWAP. We've covered the MVWAP, the moving volume weighted average price, the anchored volume weighted average price, and now we're on the TWAP, the time weighted average price. And the last one I'm going to do is the intraday VWAP, which I'll do on a separate video as always. So what we're looking at here is a comparison, if you like, because in a way, many people think of the TWAP as a variant of the VWAP, and it is, but the obvious difference is that there is no volume. And that's the reason, as you can see on the screen, we have a volume on the left, because on the left we are dealing with the VWAP, and on the right we are purely dealing with time and price, no volume. So I've excluded the volume from the chart here. But clearly, the way to use this indicator is to use it in combination with the VWAP in this way, which is why I'm presenting it in this particular layout. What you'll notice is that on the right-hand side, the TWAP, the envelopes are much tighter in terms of how close they are to the price action. And really, that's not surprising because what we're dealing with here is price and price alone. And in a sense, what we are gauging with the TWAP and why it's an indicator that we use in conjunction with the VWAP is that it gives us a view on how the price is being perceived by the institutional buyers and sellers and the algos who work off the TWAP, whether price is a fair price, whether it's overpriced, or whether the stock is underpriced. And that's really what the TWAP is about. It's about delivering that all-important message of whether the stock that you're considering or whether the ETF that you're considering is valued at fair price. These are the terms that I tend to use: overpriced, underpriced, overbought, underbought. It's really up to you, or overweight and underweight. But it's really very much about this center line, which is the WAP itself, the weighted average price. And then on this occasion, we are purely looking at the price over time and creating our upper and lower envelopes as we do with the volume variance. But what the TWAP really delivers is a much tighter view of price. You can see over here, we've had this very nice extended run. We're well above the envelope on our VWAP. So we're up to this level, and obviously we can see the volume coming in here. So we've got a certain amount of weakness coming in there already, but it doesn't seem to be amounting to much right now because we've got falling volume and falling price there. So at the moment, it's not developing into anything serious in terms of a major reversal. So we may well see the stock continue on higher. Certainly, we are seeing that from the inclination of the VWAP itself. What we're seeing over here on the WAP in terms of the price is very much bullish at the moment, but note how it oscillates around the envelopes in a much tighter format. And this really explains what it is that the institutions are doing when the price gets too far away from that central price line. Then it's overpriced, and when it's below, then they're looking to buy because it's underpriced. And you can see that very much down here where we had this rally just after 3 o'clock. We had this quite explosive rally. As I say, we're on the 1 minute time frame here. We had 4 or 5 very strong up candles. But then if you look over here on the left-hand side, you look at the volume that went into the last of those candles, huge amount of volume, and really far too much for the spread of the candle. And then we get that reversal off the highs and back down we come, and we get the same here. And that's the reason. So it's putting the two, it's running the two in parallel. And the other important point about the TWAP particularly, and it goes without saying because I'm running it on a 1 minute time horizon, it is very much an intraday trading tool at the fast end of the spectrum. So this is really a tool if you're a scalping trader, an out and out day trader, really looking for fast opportunities on the faster time frames. This is not a swing or trend trading tool. It is very much aligned, which is why I'm showing it with the VWAP as well, because if you watch the VWAP videos, you'll know that VWAP is very much a day trader's tool. It is the I'm trying to think of a word to describe it, but it is very much at the top list there of tools for intraday trading, for stocks, for futures, for ETFs, whatever it may be. So it's really up there as that's the top tool, obviously. And what we do is we use it with volume, which is why it's important that you run the VWAP in combination with the TWAP. So if you're running the TWAP, have it in this setup. I appreciate it takes up more real estate space on the screen, but have it in this configuration. You have the volume here on the left-hand side, so you're looking at VPA analysis all the time in the traditional way. That's giving you all the clues and signals there, and you're looking at the VWAP from a volume perspective. And then over on the right-hand side, this is giving you a very tight view of price averaged over time, and it's really giving you heads up to potential very much short-term intraday reversals from tops and bottoms, continuation of trend. How far are we away from the envelope, the upper envelope on the price on the TWAP here on the right-hand side? Are we getting too high? Are we like to see a pullback as we saw here? We are getting quite a long way away here. And obviously what you're looking at here is volume. We've got rising volume and rising price, so that's absolutely fine. That's all in agreement. And this is the way that you use the TWAP in combination. So it's not a tool to be used in isolation. It's a tool that you use in combination with the VWAP. It is complementary, and it is very much an intraday scalping tool to assist you in giving you a view on price, whereas on the left-hand side, we are getting a view based very much on volume weighted, but over on the right-hand side, we are looking at the pure, unfiltered price perspective. And so it's a blend of putting these two indicators together and using them in that way. And obviously on the left-hand side, we are using volume and our volume price analysis methodology to give us that all-important information about potential reversals, potential congestion phases, and everything else. So that's the takeaway from this video, which I stress again. The TWAP on the right-hand side is an out-and-out scalping tool, very much intraday, to be used in combination with the VWAP. It is supportive of the VWAP because it's giving you a different perspective, which is why we included it with the bundle. It's giving you a pure perspective on price weighted over time, which complements what you're seeing over on the left-hand side with the VWAP. So I hope you've enjoyed this particular video. I'm not going to do any more on this particular indicator because they will be very much the same, because the principles of using the TWAP are very simple, as indeed is the calculation, it has to be said. But what it reveals is very valuable. And when you see that price moving away from the outer envelope, and these are set as before at 1 standard deviation as the default, when you see that price moving away from the outer envelope, then that is giving you a heads up to potentially this price is oversold, I beg your pardon, overbought or extended, or however you want to phrase it, overvalued, and with the potential to reverse off that point and retreat back to the TWAP in that case, and on the left-hand side to the VWAP. And as you can see on the VWAP, again, we are very overextended there from the outer envelope as well. Now, of course, the other point about this all is that we will be using this in multiple time frames. So having said I'm not going to do another video, perhaps what I will do is let me do another one where we're looking at this in multiple time frames, and I think that will also reinforce the point too. So thanks for watching. Hope you've enjoyed this video. Lots more to come as always. See you soon, and bye for now.